All right, it's great to have you back with us at GoldSeek Radio. Well, today's special guest on this Gold Nugget segment, Richard Daughty. Well, my next guest, Richard Daughty, Mogambo Guru, uses his powerful sense of humor to convince readers that the entire Keynesian house of cards is in jeopardy. Richard is general partner and COO for Smith Consultant Group and publisher of the Mogambo Guru Economic Letter, and he's currently deep within his Mogambo bunker of paralyzing fear, the MBOPF.
Well, thank you very much, Chris. It's nice to be here.
Great to have you. You know, is the temperature finally backing off a bit in your part of Florida?
Just a little bit, but then it starts turning around again and getting hotter. I don't understand any of it. It has something to do with the sun, I hear.
Very good. Well, you know, you wrote, these days you only find comfort in times like these with Mozart's piano concertos, large caliber weaponry, lots of gold, silver, oil stocks, and yummy pizzas. You know, Mogambo, I can't wait to see your garage sale. Who knows what we'll find?
We're going to find gold, silver, oil stocks, yummy pizza.
You write that none of your neighbors to this day have the wherewithal to buy gold, silver, and oil, despite years, and you underscore years, of constant reminding.
That's right. You know, it used to be they could afford to buy it, and they didn't, and now they can't afford to buy it, and they don't, which I can almost understand. But when are they going to finally buy them so they can finally make some money? They're getting killed here.
You also point out that it's this continual deficit spending, the excess money being created at the Fed, making consumer prices or putting consumer prices well out of the reach of almost everyone, including your hapless neighbors.
Oh, yeah, that's exactly right, Chris. It's the government spending the money, and it's the Federal Reserve creating the money, which the Federal Reserve the government spends, which gets it into the economy, which increases the money supply that way. It's the most bizarre thing I've ever seen or even heard about. Show me in an economics book anywhere that has this in it as something they're supposed to do. These are the kind of problems we're trying to get out of in all economics books. And here we are getting into it.
This is a dollar story. As long as the dollar continues to depreciate, all of the money and everything denominated in dollars, such assets are on the brink of destruction. And I guess my question here is, have you noticed any mysterious brink truck deliveries in your neighborhood since you warned everyone?
I wish I had. I would go over and shake some hands and kind of be friends with those people.
Invite them to the hot dog and hamburger cookouts, I guess.
You bet I would, sure.
You also talk about Casey's dispatch that everyone needs to have at least 10% of their investable assets in physical, at least 2 months of living expenses.
It's way too low for me. I recommend that you put 100% of your money into gold, silver, and oil. What is going to go up in value otherwise? It's got to have some kind of an intrinsic value. So what has intrinsic value? Well, food, and gold and silver, and energy.
But you don't need a refrigerator. It's a very easily transferable, and it retains its wealth quite well. It's concentrated money.
Oh, it's been the best investment you can possibly have for 10 years. What do you want out of an investment, for crying out loud? It's tripled, more than tripled.
And not to mention, it hasn't had a losing year over that period. You could even argue that we bottomed in 99. So we're looking at close to 12 years, not one single losing year. That's while the Dow Jones has been treading water.
Isn't that the shame of it all? All those people that have their money in IRAs and 401ks, and they're investing for the future, they're investing for retirement, they're investing to put their kids in college, they haven't made a dime nominally, and after they subtract the losses they've had because of inflation and the decrease in the purchasing power, these people have been killed by 34% in the last 10 years.
Exactly. You know, I had a friend ask me over the weekend to take a look at a pension account. The company was requesting, would you like us to make some, alterations to your investments here? But there was no option for commodities, gold, silver, or oil.
Isn't that too bad?
The magnificent Mogambo portfolio, the MMP, and it concurs with your thoughts. It
says, it certainly does.
Yeah, 10% gold, too low. 90% of your assets, the remaining 90% will just lose its money. And it states 100% gold, silver, and oil. So how do you think people should go about diversifying?
Well, as far as oil goes, you're pretty much limited to the stocks of oil companies, oil drillers and explorers and pumpers and refiners and all the rest of that stuff. As for physical gold, silver, and gold, you got to get a bunch of that. It's only when you've got so much of that, you just can't stand to have any more of it around you, that you start moving into buying the shares of gold mining companies.
Now, as far as the ETFs are concerned, recently you talked about Peter Cuson's report that SLV is the primary source of storage for silver. Up to half or 50% of the silver, the world's silver inventory is supposedly sitting in Barclays SLV ETF for silver, and you point out that recently it had been rated to the tune of almost 18 million ounces withdrawn.
Oh, I think most of the silver in the world is already gone. The only thing keeping the thing afloat is that J.P. Morgan and the other bank, HSBC, have actually sold short so much silver in the commodity exchanges that for silver to take off like it's going to would collapse the whole commodity exchange. Reputation would be shot. No one would ever trust these guys again. What a racket. Yeah, so these ups and down moves are these guys trying to move out of their gigantic short position because the spin reg that just been passed looks like there's going to be position limits of 1,500 contracts. They're going to need 7,000 of them just to keep this thing going. So these guys are desperate. So yeah, things are happening. Things are happening. Big things are happening.
How about silver closed at its highest weekly close last week in over 2 years? And then we had the big correction in 2009. Well, we closed just shy of 20 last week. That doesn't mean it's a moonshot from here, but at some point, don't you agree that AG has got to play catch-up?
Never been more bullish on anything except silver in my whole life. The fundamentals of silver are so compelling. Everything points to silver shooting to 80, 90, 100, 200, 250 an ounce. No problem.
Even years ago when I first started getting excited about its prospects, gold now on its way to 2,500, maybe 5,000. If we go back to 10 to 1 on the gold to silver ratio, that's between $200 and $500 an ounce.
$500, that's right. You know, the biggest thing that's happening in silver is, one thing that's got me so excited is because of the silver that's showing up in clothing. That it has gone from literally nothing to be the fourth largest user of silver in the entire world. In 4 years, from nothing to being the fourth largest user. And we're just getting started here.
Now, let me make sure I understand you. We're talking about silver in fabric?
Yes, sir. Silver in fabric, it is antibacterial, it's antimicrobial, it's antifungal, it's antiviral, it's anti-everything. What kind of a diaper would you buy, or jumper would you buy for your baby? One that has silver in it, make it perfectly clean and sterile, or some nasty cloth stuff
filled with chemicals, right?
Yes, and this is against already a gigantic shortage in the supply of silver against a gigantic increase in demand already. The upside for silver is so compelling it makes me scream.
Well, I'm sold. You know, you also point out that in 2008, the worldwide demand for silver was about 1 billion ounces a year, while supply from scrap was well underneath that number and growing very slowly, and that supply was being outstripped by, you claim, 40 million ounces a year. At some point, when demand outstrips supply, prices go through the roof.
When the supply gets outstripped by demand, prices go up. And demand is going through the roof. And the only thing that's been sustaining so far is all these short contracts that these guys written on the commodity exchanges.
Leverage works in reverse, though, too, doesn't it, Mogambo, though? Because eventually those contracts have to be unwound. That Ponzi scheme comes to a close, well, Katie barred the door.
It's really handy when you can manipulate the market, because you can drive the price down, liquidate some of your shorts, and then let the price go up and take it and buy some at the low, and then let the price go up and make a profit there, and then drive the price down again and liquidate some of your shorts at a profit and invest the money in going long and let it rise again. You know, they can work their way out of this thing over the long term just by manipulating the market.
How do you get in that business? I want to get in that business.
Indeed.